pension expense, 5,300.
Yep,
Then, do we have another one?
that should be it.
780, 2,600, and 5,300.
Equals 8680.
So we take then our net income here should be the difference, right? This minus this is 6,020.
Yep.
Okay, so 6,020 should be our net income.
Okay.
So we go over here to our retained earnings. And what did we start the retained earnings with?
The beginning was 40,000.
40,000
Yes.
plus, what is the, what are we adding? 6,020?
6,020.
So 40,000, 46,020. Does that make sense? So our total stockholders' equity is going to be 106,020. So what are our total liabilities plus stockholders' equity? 212,720. Are we matching?
It's the retained earnings I screwed up on.
Me too,
And that's
That's where it was.
why didn't they put on their making income statement so you can make the balance sheet?
Because
because they
trick
want you to know.
I had it.
It was trick question.
Does that make sense?
I thought I had it wrong.
Okay, guys, I'm gonna go through another one of these because on your test this coming week, I want to go over some of the kind of questions I want you to be aware of, okay? Because I don't want to leave this chapter without you feeling really good, okay? Because we need to know it before we move on. So, real quick, I'm just going to turn this display off, or I'll just switch it to laptop. So, I'm going to get into the the test because I want to make sure that I know all of it makes sense to you before we move on to the next chapter.
We have a test today?
No,
Oh,
you have a test that starts, it's open, and it's available through next Saturday on chapters 1 and 2.
oh, so it's kind of like the homework, you do it online?
Everything's online,
Oh,
okay? But you can't use a book.
okay.
I'm joking. Get it? It's at home. You can use all the resources you want. And I really recommend you start with a cheat sheet. I really recommend, can we work on a cheat sheet real quick
There's
before?
actually a great one in the back.
Okay, what is it?
There's a couple of pages of just cheat sheets.
Okay, but we're doing our own cheat sheet. Get out a piece of paper, okay?
And the number one thing on there is A minus equals L minus plus.
Okay, let's
Equity. Remember that.
let's work on a cheat sheet here, guys. And you are following me just right what you're talking about. Guys, this you should, before you take a test, you need to have this available, okay? You need to, even today, as we go through problems, keep looking at this to help you. First thing we're going to type in, assets. Assets equal what?
Abilities.
Liabilities plus
RE or SE.
stockholders' equity. Okay, what is the normal balance of an asset account? is it a debit or is it a credit?
We didn't do that yet, did we?
Yeah, this is where you give me the debits and credits. I'd say it's a credit, though.
Because you have to credit
Okay.
the debit account or debit the credit account.
Yeah.
Okay, so basically, okay, let me back up. Don't worry about that yet. Let's talk about assets. What are assets? Let's talk about, let's name them.
It has a value.
It's a resource with a future benefit. So what are some assets that a company has?
Inventory.
Inventory, cash, accounts receivable. What else? Land, buildings, prepaid stuff, equipment, intangibles such as patents, goodwill. What else? Anything else?
Vehicles, that's just.
Okay, yeah, part of equipment.
Yeah.
So those are assets. They're resources a company owns or controls that provides a future benefit. Don't they? What are liabilities? Accounts payable? I'm going to say anything payable, okay? Did we talk about unearned revenues where if someone gives you money up front, but you haven't done the work yet, you get that money, but you really can't show it as income until you complete the work. So unearned revenues are a liability, okay? Anything payable is a liability. Then we move on to stockholders' equity. Stockholders' equity consists of common stock and retained earnings. Now, let's go and take it a step further and say, what's in retained earnings? Retained earnings is accumulation of all the income a company has ever earned minus any dividends they've paid out. Okay? So retained earnings is basically all the prior year's income minus dividends. So generally with retained earnings, we're going to start with a certain balance. We're going to begin with a balance in retained earnings. So this is going to begin with a balance at the start of the year, and we're going to add to it net income, or we would subtract from it a net loss. Subtract. Oh, God. Oh, my goodness. Is that sick? Or we're going to
All
subtract
that wine.
from it dividends.
It should be thought that way.
Then we'll end with an ending balance at year end. We'll end with a balance at year end. Okay? So this is basically the breakdown of the accounting equation. Now, when we're dealing with net income, what comprises net income?
Revenue minus expense.
Yes. So, basically, our income statement, revenues are what?
Service revenue.
Anything
sales
revenue or anything earned or anything of sales. Do you know what I mean? Product sales, services. Revenues are those monies we basically earn by providing a service or providing a product that a customer sells, or purchases, and we sell it to them. Expenses are basically, guys, anything that have anything with expense after the name. Advertising expense, interest expense, depreciation expense, salaries expense. Expense. What is a salaries payable?
Liability.
Yes. What is interest payable?
Liability.
But the interest expense is on the income statement. So any revenues minus expenses ultimately equal our net income. So even though the income statement right now, we don't see it on the balance sheet, it's there. You know why it's there? Because it's part of stockholders' equity, the net income. Okay? We are right now on the side calculating our net income. But if you think about it, the stockholders' equity section has common stock or any capital that was contributed. But then from there, we have to add net income. So a way we can think of it is any revenues increase our stockholders' equity. Any expenses are going to be like a dividend. They decrease our stockholders' equity. Okay? So the income statement is part of the stockholders' equity section, which ultimately is part of the balance sheet. Does that make sense? This cheat sheet, hold on to because we're going to build on it. Okay? What I would like to do is I am going to go through some problems here real quick to make sure you understand the test. Now, I'm going to be real, I'm going to give you some. You guys can write them down. We're going to go through some. So, I want to make sure you know the information we're talking about before we start the test. For example, trademarks would appear in which section of the balance sheet?
Intangible.
assets.
Woohoo! Which of the following is not a principal type of business activity? Okay.
Unless you're UPS delivering.
There's operating.
Okay.
Smarty. Remember in the cash flow statement, businesses generally have 3 types of activities. Operating activities are really why they're in business. Financing activities are those things they do to get money. Do you know what I mean? To develop their assets or their capital. And then investing activities are what they do with their money, such as purchase buildings, purchase land, purchase back other companies to make money, okay? So we divided into 3 sections this cash flow statement, which we've not spent much time on because I haven't wanted to. Because there's so much, you know, you kind of pick and choose what you want to deal with. So those are the 3 primary types of activities. Delivery, even if it's UPS, is part of their operating. That's why they're in business, to deliver, which are their operating activities. Augsburg College, their operating activities would be receiving tuition from you guys. Their operating activities would be paying for utilities, paying for teacher salaries, running the admissions, all the various departments, okay? Their investing activities may be purchasing land for a prior site. Maybe going out and purchasing Hamlin. Do you know what I mean?
Starting to remember?
No.
Okay.
And then financing activities are ways they get money, such as maybe issuing bonds to build another building, taking out long-term mortgages to finance things. Does that make sense? And then when they